This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell by as much as 3% on Thursday after U.S. President Donald Trump announced sweeping new tariffs that investors worry will spark a global trade war that will curtail economic growth and limit fuel demand. Brent futures were down $1.60, or 2.13%, to $73.35 a barrel by 0331 GMT after dropping by as much as 3.2% earlier, its biggest daily percentage decline since March 5. U.S. West Texas Intermediate crude futures were down $1.62, or 2.26%, to $70.09 after slipping by as much as 3.4% earlier. Trump on Wednesday unveiled a 10% minimum tariff on most goods imported to the United States, the world's biggest oil consumer, with much higher duties on products from dozens of countries, kicking into high gear a global trade war.
President Donald Trump's move to slap a 10% tariff on most goods imported to the United States, as well as much higher levies on dozens of rivals and allies alike, has intensified a global trade war that threatens to stoke inflation and stall growth. The sweeping penalties announced against the serene backdrop of the White House Rose Garden on Wednesday immediately unleashed turbulence across world markets and drew condemnation from other leaders now facing the end of decades of trade liberalization that have shaped the global order. As Asia digested the news on Thursday, Japan's Nikkei share index slumped to an 8-month low, with US and European stock futures also diving as investors scrambled to the safety of bonds and gold.
Moving on to the top news in the energy sector.
US crude oil stockpiles rose sharply last week as refinery utilization declined and imports rose and the market braced for new tariffs from the Trump administration, the Energy Information Administration said on Wednesday. Crude inventories rose by 6.2 million barrels to 439.8 million barrels in the week ending March 28, the AIA said, compared with analysts' expectations in a Reuters poll for a 2.1 million barrel draw. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 2.4 million barrels, the EIA said.
The world's coal-fired power fleet inched up by 18.8 gigawatts in 2024, its lowest rise in 2 decades, but new additions in China and India continue to offset closures elsewhere, data from U.S. think tank Global Energy Monitor showed on Thursday. Despite a record surge in renewables, 44 gigawatts of new coal power was commissioned by 12 countries last year, higher than the 25.2 gigawatts of retirements, GEM's annual coal plant tracker report said. At 2,143 gigawatts, global coal generation capacity is now 13% higher than it was when the Paris Climate Agreement was signed nearly a decade ago. Next, we have the top news in metal markets. Jittery investors flocked to safe haven assets on Thursday and pushed gold to a record high after U.S. President Donald Trump unleashed more aggressive than expected import tariffs, kicking into higher gear an already heated global trade war. Spot gold was little changed at $3,132.69 as of 0520 GMT, after hitting an all-time high of $3,167.57 earlier in the session. U.S. gold futures fell 0.4% to $3,155. On Wednesday, Trump unveiled a 10% baseline tariff on all imports to the U.S., and higher duties on dozens of countries, including some of its biggest trading partners, deepening a trade war that has rattled global markets.
The U.S. produced more uranium concentrate, which is used to fuel nuclear reactors, in the last 3 months of 2024 than it had in any quarter in the last 6 years, the U.S. Energy Information Administration said on Wednesday. Higher prices of uranium and the resumption of production at the White Mesa Mill in Utah, which is the country's only active uranium mill, spurred the output increase, the EIA said in a report. The rise of U.S. electricity demand brought by data centers, onshored manufacturing and the electrification of transportation and buildings has renewed interest in power supplied by the country's long-struggling nuclear energy industry.
We will now look at the top news in the agricultural sector.
The Chicago Board of Trade, CBOT, saw declines in grain and soybean futures on Thursday as concerns grew that the new U.S. tariffs could trigger retaliatory actions against U.S. farm products, with over 40% of U.S. soybean production sold abroad. The most active soybean contract on the CBOT fell 1.17% to $10.18 a bushel as of 0133 GMT, marking the biggest daily drop in a month. Wheat extended losses for a second consecutive session, dropping 1.48% to $5.31 a bushel, while corn lost 1.15% to $4.53 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.